course, let's speak to Tshabalala, who's the chief executive of the Standard Bank Group, about this. Mr. Tshabalala, thank you so much for your time. Recording a strong rebound in earnings, what would you attribute this to?
Well, thank you very much, and such a privilege to be with you, and a great question. There are a number of vectors that drive this growth. The first one is obviously what a bank does. We take deposits and we lend. As far as deposits go, deposit funding grew by 9%, which was really underpinned by double-digit growth in current and savings accounts. So in other words, people had faith in the safety and security that is provided by Standard Bank, and they deposited large sums of money with us. Next, we recycled those deposits into loans. So our loans and advances grew by 9%, mainly to customers. That 9% was driven mainly by home loans and vehicle and asset finance. Now, you ought to ask, why was that happening? Well, it appears that the South African consumer had greater confidence. We also saw that in the consumer confidence statistics that are being released by statisticians. Next, as a consequence of the greater and better activity that we saw, people were swiping their cards more, they were making more payments, and that gave rise to higher fees and commissions. Our trading revenue rebounded, as did our other income. Simultaneous with that, we managed our costs very, very well, at below inflation, and most importantly, as people's financial position improved, our income statement charge improved dramatically. It halved from the previous period at just shy of 10 billion rand. So those would be the major drivers of that financial performance.
And I couldn't help but notice, though, on Liberty Holdings Limited side, it's showing progress operationally, but there's also a negative impact by the excess claims and a pandemic provision top-up. Do you mind talking to us about that? What does it tell us about what we are seeing there?
Well, on the contrary, we are very proud of our colleagues at Liberty and what they did. That financial institution fulfilled its mandate as a life insurance company and met people's claims and met its obligations as they fell due. With the result, of course, that because of the pandemic, people falling ill, falling sick, and people passing on, people were claiming against the policies that they had taken out in contemplation of such events. And therefore, the company was meeting its mandate and therefore suffered a loss as a consequence of that major pandemic provision. And so I'll repeat, we're very proud of what we did. We fulfilled our mandate and acted responsibly at that moment of vulnerability upon the death of a loved one, people suffering from illness, people losing their jobs, and the company meeting its obligations as they felt due.
And I wonder, when it comes to the geopolitical tensions that we are seeing, I know, of course, you talk about how much of a limited risk there might be, but this might also play, especially in, what we are seeing, the Ukraine and Russia conflict. It might present a risk when it comes to your, the present outlook, could it?
Well, let's follow the data. Well, let's start with the data. The International Institute of Finance says that it's forecasting world growth to be down from 3.9% where they initially had projected, and they've brought it down to 3.4%, attributable exclusively to this major conflict. They have not changed, however, their forecast for the US or for China, and indeed our own economists at Standard Bank have not changed their forecasts for South Africa. And that's mainly because they believe that the impact, assuming current assumptions, will not be dramatic on trade, investment, and the movement of goods and so forth on the African continent. Essentially, the proposition is that in the case of South Africa, we export, of our exports, roughly 0.3% of our exports go to Russia, and roughly 0.7% of things we import come from Russia. And then their foreign direct investment is 1.5%. So that's just a commercial and a statistical fact. And so it will not have a major impact. However, if oil prices continue at above $120 per barrel, if they continue for an extended period of time, if gas prices increase, that will clearly have a negative impact on global inflation and therefore inflation on South Africa. I must just point out that from a terms of trade perspective as a country, we're an oil importer. So as those prices increase, it's negative for us. But we're also an exporter of other commodities, including coal. And that offsets that negative impact. That, Bongiwe, is one of the reasons why you've seen the rand remaining relatively robust during these very, very difficult times. But like I say, if this was to persist for much longer and become more widespread, obviously the risks would be on the upside.
And Mr. Tshabalala, one of the things I saw also in your results is another risk, which, the UN Secretary General consistently talks about, and that is the risk of course, climate change. And, that the climate remains a reality when you look at how, we're seeing things improve. I see that there's also now an approved policy, an approved climate policy by Standard Bank. I wonder what that board approved policy looks like and what could it include and when can we expect it to be released?
Again, an excellent question, Bongiwe. Let me start with when you can expect to get it. We're going to be releasing it on the 16th of March. We're actually going to have a roundtable during which we debate it and then we will release it to the public. And please look out for it. It's a great piece of work. Proposition number one. Secondly, the board approved policy will be consistent with what we undertook at the annual general meeting, where we committed to publish a detailed climate strategy and quantified targets with regard to specific sectors of the economy and specific asset classes such as oil, gas, and so forth. And that policy will be within the four corners of those principles, as well as the TCFD aligned metrics that one would reasonably expect. And so I would invite you to look out for it. And I'm sure you will be reading it with great interest. Thank you, Bongi.
Definitely will read it. And so it means that on the 16th, we have, it's a big day, and we'll potentially have you back on the show to talk about it as we, delve deeper into something else. But one of the things, Mr. Tshabalala, that continues, though, to be a huge concern is the issue of rolling blackouts. And this is not only a concern for, only ordinary South Africans, but businesses as well. And I remember in the previous results by Standard Bank, there was also, a concern around Eskom and, looking at some of the other Liberty investments and, some of the earnings there and the drag that this particular issue of rolling blackouts may present. I wonder, when you're looking at the current, rolling blackouts that we have, certainly it does not bode well for, investors, but at the same time, the economy.
No, it doesn't, Bongiwe. It's very distressing. But I'm a glass half full person, and I would say to you, look at the facts and look at the statistics. I've spent a great deal of time talking to a large number of corporate leaders who are our clients, both here in South Africa and on the continent. And I remain very confident listening to them that things actually could look good for South Africa in the foreseeable future. If you take the State of the Nation address, you take the budget speech, and you take what is being acted and what is actually being done by South Africans, there is some hope. What is that hope? Well, it looks like, we will have 4G and 5G rollouts, which will give rise to investment by people as a consequence, as the spectrum gets released. People will have access to renewable and decentralized energy in South Africa as a consequence of the current regime, where manufacturers and telcos will be able to self-generate up to 100 megawatts. ESG, what you and I were speaking about, the climate and social dynamics that are forcing strategic changes by businesses, giving rise to specialized funding. Again, an opportunity. Oil and gas opportunities, even in this crisis. There are potentially great opportunities for people as the crisis unfolds. In particular, thinking around gas as a transition fuel. Opportunities to provide financing to consumers and consumer businesses here in South Africa and on the African continent. Participating in logistics as Transnet restructures itself. And so I would say to you, if you take a half glass full approach to things, even in the most difficult of times, there will be opportunities.
It's always interesting to speak to someone who sees the glass half full. Thank you so much for that and that reminder, Mr. Tshabalala, to just really be positive about some of what we're seeing. Thank you so much for that. That was Tshabalala. He's the Chief Executive of the Standard Bank Group.